Real estate as a pack in today's trade has not been doing too well. A bit of pressure building up. Indiabulls real estate, unsold properties, Sobha developers, all of them really under some bit of pressure. Indiabulls in fact down close to 4% in trade today. DLF is the stock, the big one, that is also really under some bit of pressure, but there's a fair amount of news coming there. In a very complex structure actually, DLF has decided to merge Garif Builders with DLF Cyber City. The company is looking at a REIT listing for DAL by April next year according to sources. But let's go across to our research analyst Vishal Bhargava now to explain these details to us. Vishal, a fairly complex structure, this transaction, isn't it?
Well, absolutely, Devina. Just to take you to the broad contours of the deal that we're talking of between DLF. DLF is going to be merging Garif Builders with DLF Cyber City. Now, why exactly is this transaction so important? Is because DAL is wholly owned by Garif Builders. So, what will be a situation where right now DAL is a subsidiary of Garif Builders? Post this merger that we'll be seeing with DLF Cyber City, DAL will become a subsidiary of DLF Cyber City. So, just to give you the realities post this merger that we're talking of in terms of share ownership, the DLF stake in DLF Cyber City will go down to 60%. Currently, DLF owns 100% of that. Post merger, the stake of DLF will go down from 100% to 60%. The remaining 40% in DLF Cyber City will be taken by DLF promoters. So that's essentially in terms of the structure. We'll see Garif Builders merging with essentially DLF Cyber City because DAL is a subsidiary of Garif Builders. Then essentially DAL will become a subsidiary of DLF Cyber City. So that's essentially in terms of the structure of the deal. What essentially is the aspect in terms of DAL? Well, as you mentioned, they're looking for a listing in April in Singapore. The company is looking to raise between $1 to $1.5 billion via this listing in Singapore at a cap rate of about 7.5%. Now, our own talks with analysts suggest that 7.5% is probably a bit too optimistic. They put it at between 8 to 8.5%. Why is this cap rate so important? Because valuations are essentially inversely related to the cap rate. So higher the cap rate, lesser the valuation, and lower the cap rate, higher the valuation. So that's the key element that's coming out in terms of DAL listing. And of course, in DLF, the benefits that they get in terms of listing is that DLF will get about 13.5 million square feet assets of DAL. Currently, DAL, remember, is owned by the promoters. Post this transaction, DLF investors will actually get some share of that pie and the big assets that DAL as well has. So all in all, it's a complex structure, still awaiting some sort of unwinding. Okay. Let's just see how it goes.
Okay, right now the stock flat to marginally negative. Vishal, many thanks for joining us. In fact, let's carry that analysis further and get in Bhuvan Yadav, who's a research analyst at Karvi Stock Broking, who joins us on the line from Hyderabad. Bhuvan, many thanks for joining us. First, explain to us, it's a complicated structure, but for DLF per se, if I was a shareholder, how should I react to the way the deal has been structured, especially the fact that DLF shareholding in DLF Cyber City now comes down from 100 to 60%?
Regarding the contours of the deal as to what is the quantum of debt that DAL has on its books and what is the quantum of debt that Cyber City has on its books and what is the growth potential of and revenue potential of both these two entities, there's not much of clarity on it as of now. From what little we know is that Cyber City is a pretty profitable arm of, a 100% subsidiary of DLF. It has approximately, based on media reports, revenues of 1,400 crores and net profit of 1,100 crores. Now, this is being merged with DAL, which has approximately revenues of 700 crores. So, if we look based just on the revenue, the absolute revenues, this transaction appears to be fair. But this would be, at the upper end. What we think is that this transaction, based on without any access to any debt numbers, we think is possibly neutral for DLF shareholders.
Okay, so you see this as a neutral for DLF shareholders. Now, going forward, essentially DLF is also looking at listing DAL, which would also be unlocking a lot of value. Again, if we were just discussing cap rates, have you done some back of the envelope calculations in terms of the possible value that could be assigned to DAL in the current market conditions?
Essentially, from what we understand is that we currently do not have access to what is the quantum of debt that DAL has its books or what is the quantum of debt of Cyber City has in its books. I was telling you previously, the best case is that this transaction will be neutral for DLF shareholders. What we know is that the cap rates for a Singapore listing would be in the range of around 6 to 7%. Once we have the debt numbers that these two entities have, we will get an idea as to what is the kind of cap rate at which this merger has taken place. there needs to be far more, data that needs to be given out on DLF Assets and Cyber City, as these are two very closely controlled promoter entities.